Hello guys, JB here. This is going to be a video about how powerful price action can be in trading if you use it with the right confluence factors. In this case, we have USDCHF, the 30-minute time frame, and very clearly you can see a downward movement, a very strong downward movement. And every time that the price touched that level, the price just came down. Can you see that? Now, a downward trend is composed of lower highs and lower lows. So every time that the price touched the trend line, it came all the way down. Can you see that? Here you can see how the price created a support that then became a resistance. And now the price came all the way down, breaking below the support, right? Creating a new support. Can you see that? And then the price started to move sideways. And when the price touched the trend line again, the price just came all the way down. It created some sort of support again, that then becomes a resistance, something like this. And then the price starts to move again. When it touches that trend line, it comes all the way down, all right? It goes up again, and when it touches the trend line again, keeps moving down, all right? That's essentially what you will find in a downward movement. So in this case, you should be looking for sales. Don't fight the trend. If you see a very clear trend, just go in the same direction. In this case, sales, all right? It doesn't make sense to be looking for buys, all right? So now let me show you a very clear strategy, which is the inside bar strategy, which is one of the most unused strategies of price action because people are not able to actually understand how it actually works, all right? So in this case, we know that this is the high, right? This is the time when the price touched the trend line right here, right? And this trend line keeps coming all the way down, right? So let me draw this for you. So we have something like this, all right? And here we had a clear resistance, a clear support. Can you see that? Now let's take a closer look to see what we had there. So right here, when the price touched the trend line, it was clearly the moment when the price was going to keep coming down. All right. Now here we can see an upward movement, which is the retracement move or the pullback, right? And then the price touches the trend line, and this was the time for you to know that the price was going to keep coming all the way down. Why? Because the price stopped doing a movement of higher highs and higher lows right here. So this was a consolidation period. Let me show you guys. This was a consolidation period, and even though you were able to see a very clear higher highs and higher lows movement, which was a upward trend, this movement is their pullback or retracement move, but also we had the most important trend right here. So you have the trend line and you have this consolidation period telling you that this upward movement was finished. All right? And then you knew that the price was going to keep coming all the way down. All right? So now let's take a look at the left side to see what we had. And in this case, what we had was a very clear support and resistance, all right? And it was right here, support. This was a resistance that was respected right there. So in this support, you should be looking for a good entry, all right? So this was the consolidation period. The price broke to the downside, telling you the new direction of the market, and then we had this pullback, and right here was an awesome time to open a selling position. All right? Why? Because you had, of course, the trend line, you had the end of this upward movement, the consolidation period, the breakout to the downside, and the retest. So those were a lot of confluence factors for you to know that the price was going to keep coming down. So let's take a closer look just to make it clearer. And right here, let's show our key levels. So right here, we had the support, right? This was the consolidation period. And here we have the breakout to the downside and then the retest. Now, right here in the retest, you can see a very, very clear inside bar. So this inside bar is telling you that there is indecision at this moment in the market. So even though the bulls were pushing the price to higher levels, right here you can see with this inside bar that the sellers or the bears were jumping in the market. All right. So based on this strategy or how this strategy works, you should be looking for a breakout either of the high or the low of this outside candlestick or mommy candlestick and a stop loss above it, right? And then your take profit should be 2 to 1, in this case 20 pips, all right? Now, a very, very good approach to this strategy is just for you to wait till the price gives you some sort of retracement. All right? Why? Because it's necessary for you to have a tighter stop loss. All right? This stop loss is kind of wide. So in this case, right here, the stop loss would have been around 7 pips, and this is some sort of 50% retracement of this outside candlestick. So the price came down, the price went all the way up, right, creating again a downward movement trend, right? And take profit should have been 2 to 1 again, right? In this case, some sort of 15 pips, something like that. Again, how does it work? Combining different confluence factors, including the whole market structure, key levels, candlestick patterns, and also if we want to take a look at some indicators just to have even more confluence factors, you can see how this inside bar is rejecting the 8 and the 21 moving average. Can you see that? So you had enough confluence factors to know that the price was going to just keep coming all the way down. And if you were patient enough, you would have had up until now a very, very, very good risk to reward ratio.